home building fell sharply in July, and home builders are getting hit the most from this decline in demand. But instead of running away from home builder stocks, I actually think that there's some companies that are worth investing into right now. And that's what I'm going to cover in this video. So guys, smash that like button, subscribe if you're new, and of course, drop a meow in that chat. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel. So some crazy news. It wasn't unexpected at all because home affordability has been increasing, but home building actually fell in July as costs increased. So housing starts actually declined approximately 10% amid inflation and higher mortgage rates. But the question is, what is the real story that's going on here? And it all just comes down to affordability, right? A combination of the price and interest rates and cost of building new homes is pushing affordability much lower than what it has been in previous generations. And so you can see exactly what I mean by looking at this chart, that the lower this line goes, the lower affordability is. And we can see that we are essentially at record unaffordability right now, which is of course why many people are shying away from buying homes. Another indicator that we are in a troubling environment is notice how many homes that have been listed have had price drops. So this is the 4-week rolling average. Notice that approximately 6% of listings had price drops as of June 12th. So the decline in affordability is causing some sellers to start reducing the price of their listings just to be able to sell that property. And that was not a problem at least a year ago when there was offers $100,000 or more above the asking price. So it's crazy how much this market has turned in just 12 months. Another indication that the home market is drying up is that purchases are actually getting canceled at the highest rate since 2020. So 16.1% of new home purchases actually got canceled in July of 2022. So that's a striking indicator suggesting that people are backing away in this environment. And I found an article discussing it, and effectively what they're saying is that buyers are skittish because they're afraid of a potential recession that could cause home prices to drop, and they don't want to end up being underwater on their mortgage. So that's effectively what's happening. So that's a natural occurrence and can cause the housing market to freeze, I do believe. But economists are stating that there's no guarantee that buyers will be able to find better deals if they hold off right now, because although annual home price growth is expected to slow, it's not expected to go backwards. Prices are still on the rise, as Redfin economists are predicting. And so I personally think that home prices would go down in this environment, but there seem to be economists that are much smarter than I am that are saying that home prices are not going to crash. But I don't understand how that doesn't happen, because we already have mortgage rates at record unaffordability levels, and the Fed has commented that they want to increase rates by another 175 basis points. So that will be like infinite record unaffordability, and I just don't see home prices continuing to increase in that environment. And so here's what's scaring investors right now. This article goes on to say that the biggest losers from the latest housing crash aren't sellers. Instead, it's home builders who are suddenly finding themselves with a glut of unsold houses. And this is why on this channel, I've been focusing on spec builders, not tract builders. Now, recall, guys, that tract builders can build homes cheaper, but in order to do that, they buy up huge swaths of land and build whole communities. Spec builders will buy up individual pieces of land or small communities and build those up, and so they have less invested. So if the housing market turns, they have less inventory in specific locations, and they can generally liquidate it faster than the tract builders. And so that's why I've been focusing on the spec builders. That's why I like companies like LGI Homes, although they are a bit larger, and so I have been focusing on other companies like Dreamfinders Homes as well. Now, overall, I don't think long-term there's an issue with spec builders. I don't even think that there's an issue with tract builders. And the reason why I do believe that is that there is a tailwind in the US housing market. And what is that tailwind? Well, America is short more than 5 million homes. And so a decade of underbuilding and a bulging population of young people aging into home ownership has threatened to prolong the affordability squeeze, i.e., demand is expected to remain strong. And so here's a quote that I found. Despite the fact that there aren't enough housing units in the country, builders are not willing to take the gamble that's required to build them, said Jerry Howard, Chief Executive Officer of Home Builders Group. They're afraid that in a recessionary environment, they won't be able to sell them. So what's happening here is that builders aren't overbuilding. And so that's what's going to cause the home prices to remain relatively stable. But what it's also going to do is it's causing home builders' balance sheets to be relatively clean right now. Now, I've been focusing very heavily on balance sheet, debt amounts, etc. So all of my models that I built on the home builders, I've been addressing this risk, and I've invested in 3 home builders at the moment: LGI Homes, Dreamfinders Homes, and TriPoint Homes. And I might add additional home builders if this environment pushes their share prices much lower than they currently are. Now, the share prices are already incredibly low, and this is what I mean. Now, LGI Homes right now is trading at just 7 times earnings. Now, this is what they released for their full year 2022 outlook in their Q2 financials. So they actually brought down their home closings for fiscal year 2022. So you can see that those cancellations are impacting them. So their home closings are now down to 7,500 homes to 8,300 homes, which is down from 9,000 to 10,000 homes. Now, the average sale price has actually increased, so it's up from 315 to 330 to 345 to 360. Their gross margin has actually gone backwards a little bit, so that's very interesting that they're not able to generate as high of a margin on the sale, and SG&A has actually increased. So overall, you're seeing them not be able to sell as many homes, and the homes that they do sell, the profitability is lower. So you can see the cracks of this market start even challenging some of the better home builders like LGI Homes right now, and that would cause investors to walk away. I totally understand that. It's hard to predict what's going to happen in the future. Now, I actually built out the guidance for 2022 that they provided in Q4, and I compared that to the guidance for 2022 that they provided in the Q2 earnings release. So obviously, 1,600 fewer homes are expected to be built. The average sale price will be $30,000 higher, but of course you can see revenue will actually be $279 million lower. And when you take into account the higher SG&A costs, operating profit is going to decline by $64 million, or approximately, I don't know, give or take 10%. And what does this mean for my forecast? Well, my forecast largely remained unchanged because I was already forecasting a large decline in fiscal year 2022. And then on top of that decline, I was forecasting another decline in fiscal year 2023. And then in 2024, 25, I expect no increase in revenue, and then in 2026 I increased just a marginal 5% increase in revenue. So you can see how there's a lot of conservatism built into my model, and yet I still believe that these stocks are cheap. And so I want to get into my valuation, but before I get into my valuation, guys, just a reminder that 80% of the watch time on this channel is from people that are not subscribed. So please, if you can, subscribe to the channel and hit that notification bell to be notified when I upload great content. Now, going right into the valuation, you can see that it's currently trading at 6.9 times their 2022 earnings per share estimate, and that's an earnings yield of approximately 15%. So that's nuts. Now, I'm only using a terminal multiple of 10 times earnings. You can absolutely use a higher terminal multiple, but just on that terminal multiple and the low expectations for revenue that I have for 2022, 2023, and beyond, this company is currently trading at 62% of its intrinsic value. Now, if you guys are like me, if you've already built up a little bit of a position here and you want to get in much cheaper than $100 per share, I got some good news for you. The February 17th, 2023 cash secured puts look pretty interesting. Now, note that the bid and ask range from 4.8 to 6.3, but what I'm looking for is a bit out of reach at the moment, but I do believe that I will be able to get it in the next little while. I want to sell the $85 cash secured put at $6.50 per share, which reflects a 15.5% annualized yield. And if I'm exercised on the cash secured put, my yield on the net cost basis for that transaction is higher than 20% into the future in terms of like equity yield. And in other words, what I'm saying is that the earnings per share divided by my net cost basis per share will be approximately around that 20% a year range. So I'm happy to hold that stock position into perpetuity. So what you have is a win-win situation, which is why I absolutely love cash secured puts. Heads, I make 15.5% on this transaction. Tails, I get a perpetual, at least in my opinion, a perpetual 20% annualized yield. Now, the home building market is cyclical, but I do believe that the downside is built into the share prices of these companies right now. So we'll see how this works out. Now, this is never investment advice. Always talk to your investment advisor, but that's how I'm thinking about it right now. Now, if you want access to my LGI Homes model and all the other models that the Patreons have access to, you can get access to that at the lower tier of the Patreon. It's super cheap, and I made it like that on purpose. And if you want to join us for a live epic monthly presentation, you can join us at that upper tier for the Patreons. Now, housing is not just the only opportunity that I'm seeing right now. I actually put out a video on Warner Brothers Discovery. Seth Klarman actually just bought into this name. And so I actually discussed this whole opportunity right here.